All right, everyone. Got 2 o'clock on the dot. I want to thank you all for joining me this afternoon. I know it's this time of year is busy, so I appreciate you taking the time out of your day to be here. We got a great session planned, informative, practical, and hopefully even a little bit of fun along the way. My goal is to make sure you walk away with valuable insights you can immediately use with your clients. And before we dive into the core of today's topic, I want to take just a couple minutes and give you a quick overview of who we are and introduce the team behind the scenes. So we know that the success in the business takes more than just the good products that are out there, and it takes support, tools, and the right people behind you. And that's exactly what we provide. When you work with Golden Care, you're not just signing up for a contract, you're joining a team that's dedicated to helping you succeed. And we've built a whole suite of tools and resources designed significantly with you, the agent, in mind. So we're talking quoting tools, customizable marketing pieces, online training, webinars, one-on-one support. Basically, if it helps you close a sale or better serve your clients, we've got you covered. Here we are, regional director team, behind the scenes. You got a group of people who truly care about your success here. We're not just a call center or a generic support line. When you reach out to us, you're talking to real people who know this industry inside and out. So between us three, we got a combined 42 years of experience. Most of that comes from Jeff Clark. He's basically the Yoda of our team, wise, experienced, and thankfully a lot easier to understand most of the time. But in all seriousness, that depth of experience means when you call us, you're not getting canned responses or generic advice. You're getting insight from people who've actually been in the field, Jeff, who understand the challenges you face and who can help you find the right solutions fast. So that's what we mean by superior personal service, because to us, you're not just another agent number, you're a partner. We've got your back every step of the way. Now that you met the team and seen a bit of what makes Golden Care special, let's jump into the real reason we're here today. So the top highlights of our revolutionary short-term care plan. And the focus is going to be on one of the most innovative short-term care products in the market right now. Now, I know you might be thinking short-term sounds limited, but trust me, there's nothing short-term about the value this plan brings. It's a powerful solution that continues to evolve with the needs of the clients today and fill those huge gaps that many people don't even realize exist. So in this next section, I'm going to highlight some of those key features that make this plan truly revolutionary, why it stands out, how it supports your clients, and how it can help you grow your business in a big way. Product OmniFlex, welcome to the future. All right, so I first want to touch on the shifting market. So as we all know, the market is shifting, and so our clients need. For years, long-term care insurance dominated the space. And don't get me wrong, there's still a place for long-term care. It's just many of you, you found that traditional LTC policy used to be, a bit tough to sell between that in-depth underwriting, rising premiums, and sometimes, the limited flexibility. So it can feel out of reach for a lot of people. So that's where short-term care, or STC, steps in, and it's making waves for all the right reasons. Short-term care plans are growing rapidly because they strike that perfect balance. Affordable premium, lenient underwriting, and a surprising amount of built-in value. They're accessible, flexible, and let's be honest, are easier for clients to say yes to. And here's one of my favorite parts. With the built-in OmniFlex RX benefit, clients can even use, their prescription benefits to help offset the cost of their premiums, and in some cases, cover the entire premium. So how's that for a smart design? And the bottom line is the market is shifting and STC is leading the way. Time to take that leap into the future of offering an alternative care coverage option. And I'm going to show you exactly why this plan deserves a spot in your portfolio. Now, this next slide is one of my favorites because it really shows why short-term care isn't just another product. It's helping save the industry. So we'll take a quick look here. We got a little animation going on. And so over the past years, traditional long-term care has seen a major decline in popularity. Many of you have witnessed that. And it really comes down to three main factors. And number one, that's the pricing and sustainability issues. You know, when LTC first came out, insurers underestimated how long people would live and how expensive care would become. The policies were priced way too low, interest rates dropped, and claims lasted much longer than anticipated. So to stay solvent, carriers had to raise premiums, sometimes dramatically, leaving many of the policyholders frustrated or dropping the coverage altogether. Number two, strict underwriting. Long-term care typically requires detailed medical history, cognitive assessment, phone or in-person interviews, and that means many applicants were declined, especially those older ones with several health conditions. And then three, the shrinking carrier participation. Because of those financial loss claims, many major carriers exited the market. At one point, there were over 100 companies offering long-term care, and now only 3 remain. So that limited competition drove premiums high and product flexibility lower. So as a result, we saw the shifting market move to the more modern solution, short-term care. And I just want to highlight, so short-term care plans, the benefit periods cap around 2 years. So that shorter benefit period softens the blow of inflation and eliminates those catastrophic claims. So the shorter benefit periods being sold means carriers can price these policies sustainably and stay profitable. So this is going to keep them in the market, control their risk while still providing valuable coverage. It certainly is valuable coverage when you factor in the built-in restoration, and I'll touch on this a little bit later in the presentation. So I'm going to highlight just how accessible, affordable, and flexible these short-term care plans really are. Because of the well-thought-out design of these policies, thanks to the masterminds in the industry, I got to give a shout out to Tom Randall. Easier to explain, more affordable, faster to issue. And now agents are re-engaging in the extended care conversation. So that renewed activity is revitalizing an entire segment of the insurance industry that's been fading out. All right, here we go, folks. The highlight. I really want you to tune into this one here, because this really separates short-term care from traditional long-term care. There's no 90-day certification requirement to file a claim. So to trigger a long-term care claim policy, your doctor must certify that you will need care for at least 90 days. Now, if you've sold a long-term care policy before, which I assume most of my listeners today have, you know what a headache that waiting period can be. So clients basically have to prove that they'll need care for 90 days before they can access their policies, that they've already invested a lot into. So this 90-day hinder hits hard on not only the policyholder themselves, but family and friends, because they have to step up to the plate now and help with the recovery. We're talking knee or hip replacements, osteoporosis, broken bones, cardiac arrest, heart valve or bypass surgery, recovery after a motor vehicle accident, and all of which they don't always require a long period for recovery. It's sometimes a few weeks, a month, or 2 max. So take a second here and think about all the people in your life that have experienced any of these events or multiple, and 9 times out of 10, who was pulled in to help with the recovery process? Your long-term care policy wasn't, so you got it, family and friends. So everyone needs a short-term care safety net, because it boils down to the fact that not only is the impacted person affected, but a burden is put on their family and friends. So think about the butterfly effect concept. A potential tornado is triggered, not their LTC policy. All right, this is inpatient or observation. This can be a little bit confusing to clients, and honestly, even some of us in the industry, the difference between being admitted or as an inpatient versus being under observation. And I'm gonna pull you in, Jeff. Are you in there? in the background.
Yeah, I'm here. Yeah, you know what? And this is a good lead in. If just back up for just a half second that slide, and then bring me right back to this one.
Sure.
What Morgan's talking about here, and this is, Jeff Clark here again, a regional director, and I have been around a long time. I guess it does make me wise. Thanks, Morgan. I'd like to say it makes me old, but okay, we'll go with wise. I can tell you that I've written, 700 long-term care plans, and short-term care has only been around for maybe 8 years or more. So, I was a little late to the game on this. But one of the reasons I just didn't really realize that the short-term care plans don't have that 90-day certification. And so, yes, so many of my long-term care clients will call me or their daughter or their son, because mom's getting a little senile. Hey, my mom has this long-term care policy. She's had a hip replacement. She's laid up at the house. She's been paying all these years, these long-term care plans. And I can't tell you how many times I've had to tell people that's not a long-term care claim. Sorry, your hip replacement, you fell and cracked your hip, you broke your hip, you had surgery, you had a bowel. Oh, how many times have I had to say no? And so, and I just didn't really realize until I got into short-term care that, yeah, they don't have this 90-day certification where that care is going to have to be going on for 90 days or longer for it to work. And so with long-term care, they have this great plan, great home care package, but good luck accessing it. So the beauty of short-term care then is that you're going to cover that short-term stuff, like all the things you're seeing listed here, but then it has the legs to go out and pay 1 to 2 years out in a facility or a home care need. So it's kind of the best of both worlds, I like to say. And I overlooked the power of the, I guess, short side of it, being that there is no 90-day certification. Those things can pay day one on a hip replacement, all that stuff. So, and then leading into this next one I'm going to kind of clumsily go into that next slide then, Morgan. Because even that knee replacement, all that stuff we just saw there, a lot of this is predicated, let's just face it, most of these times we're talking about people of Medicare age. So I'm just gonna, yes, there are people who need things underage, and it's not too undifferent from Medicare, but let's just kind of shift to the Medicare arena. And how it affects private insurance as well is very similar. But so when you go into a hospital, maybe again, it is for an accident, a slip or a fall or a what have you. When you walk into that hospital, Medicare is getting penalized for readmitting people. So for whatever reason, it's more expensive billing wise. If someone takes a patient in, they get admitted, they're there for a day or two and they send them home, and then they have something else, they get worse, they come back, they have to readmit them. Well, that's a no-no in Medicare. So what you're seeing is hospitals are more and more marking people as observation, a little apprehensive to go with the inpatient designation. And so this all seems like it's no big deal to the average person. But when you start talking about rehab, maybe it was a mild stroke or something where you did need a couple day hospital, or it gets deemed observation. Well, that shifts from Part A to Part B of Medicare. And suddenly now you don't have those days 21 through 100 that normally your Medicare pays days 1 through 20. Medicare supplements and Medicare kind of combo to do days 21 through 100. This is all under that Part A table. So when you start looking at inpatient versus observation, and even if you are billed under Part A and you've had that stroke and you go to a rehab center for a week, what's always interesting is that who makes the determination of how much care, or when does Medicare stop paying? Just because Medicare says they'll pay for 20 days, and actually they'll cover days 21 through 100 in combination with a supplement, et cetera. So it's actually not Medicare, it's not the patient, it's the person who's doing the rehab. Some random, and I ran into this with my dad 2 different times, some random physical therapist who's doing the therapy, he might do 3 sessions with my dad, and then they decide any more work that I'm going to do is not going to really help this person. So they call it leveling off, that any more work I'm doing is not going to help. So he may only get 3 days of what I thought was going to be 20 days of coverage. So regardless if it's billed inpatient or observation, that can change a lot of things on how you're, suffice it to say that whether it goes inpatient or observation, the rehab part of Medicare is getting skinny. It's almost non-existent. So then this hurts a lot of people. There's another stat, Morgan, I'm going to steal your thunder, but I think it's like 3/4 of all bankruptcies are a direct result from leaving the hospital. And so this is all very real stuff. And that previous slide kind of showed you how a short-term care steps in there from day one to cover all that stuff. It doesn't matter if Medicare is involved. It doesn't matter if any of that stuff, if it was inpatient or outpatient, or observation. It just simply says that as soon as you're 2 out of 80L deficient, we're paying you from day one. And so with all those two slides combined, it is a shifting market, and this short term becomes so important. And this inpatient observation thing is a big one too. But Morgan, that's what I had. Sorry, I'll let you kind of roll on.
No, we loved it. I loved it. I appreciate you sharing your insight. You know, you got experience working directly with your own clients, and that adds so much value. And I hope everyone listening understands how important it is to take, you know, this in consideration when helping to protect their own clients. So thank you.
Go ahead. Yeah, thanks.
All right, we're gonna jump in. You know, now that how we looked at how the market's changing and why short-term care is becoming, you know, the star of the show. So let's talk about the product that's driving the movement, OmniFlex. All right, let's take a look here, see where it's available. And here's the good news: OmniFlex is approved in a broad swath of states. We are at 38 currently. So this means you, as the agents, you got a broad landscape to work with, and of course. Take note that there is some state-specific variation, you know, as far as riders, benefit periods, minor tweaks that may differ depending on the filing of each state. So just always make sure to check your state's specific brochure or reach out to us. We can provide them for you, no problem. And before we move on, here's a quick highlight for some of you out there who have been patiently waiting for. The most recent release was Kentucky. And, you know, I want to reach out to you guys. Attention to all of you writing agents of Kentucky. You are literally sitting on a gold mine right now. And that's because it was filed with a 3% benefit increase on the very first policy anniversary, and that has no cap. So that's huge. You're basically armed with a unique game-changing advantage that no other state has. So by not offering this, your clients are missing valuable protection and benefits.
Morgan, when did Kentucky get released? Just recently, right?
It was, yep, we are a couple months in.
Yeah, second month now. Yeah, so it's brand new in
Yeah.
Kentucky. They haven't had a short-term care plan down there, so I would jump on that. I agree.
Yeah,
Sorry, go ahead.
absolutely. And a little boost of motivation to fuel that drive. We got an incentive that started on November 1st, so we're about 5 days in. Still a lot of opportunity here. Any first-time riders are going to earn $175 cash. And then also there's raffle tickets that are looped in here. So, you know, any other agents that are previously written agents that have written policies, you still get a shot at, you know, earning extra cash with these raffle tickets. There's kind of a breakdown on the bottom there that you can see how they equate. And I'll provide these slides so you guys can have all this information. But quick note, this incentive is only available to our contracted agents. So if you've been on the fence or watching from the sidelines, now is the perfect time to jump on board and take advantage of everything that we have to offer here. And what are you waiting for? Call Jeff, Manny, or I today, tomorrow, Friday is cool, whatever. No pressure. It's just a regret that you will potentially have to live with for the remainder of your life. But no, yeah, it's awesome. Any incentive, you know, on top of the money that you're already earning it's great to have there. So that's going on. And all right, let's dive into what really sets this product apart, the plan design itself. Facility benefit options, we're going to start out with first. I'm going to break it down along with the built-in features, talk through a few of the overlooked details that make this plan such a strong competitor. And you can tailor the daily benefits in benefit period and elimination period, so this plan fits comfortably within your client's budget without sacrificing quality or coverage. We're going to start with the foundation, the base facility benefit. It's really the backbone of the plan. It's what determines how the policy performs when a client needs care at a facility, whether that's assisted living, nursing home, or hospice. And you can choose a range from $50 up to $400. That gives you incredible flexibility to fit nearly any client's budget or need. You also get to select the benefit period, the options of 90, 180, 270, or 360 days. I want to note here the most common selection is 360 days. because obviously it extends your coverage, but it's also, this plan's so affordable that there's no need to lower the benefit to save on premium dollars. That's kind of a tweak that you'll see in the long-term care when you're designing a plan. There's no need to do that here. And there's also the elimination period. You can select between 0, 20, 60, or 90 days. We see mostly the 0-day selection. And, most people, no one wants to wait for the benefits to kick in. People want their money. The bills are waiting politely in the meantime in the background. So it's your money and you can have it now. So what I really like about this setup is how it is, it's easy to explain to your client. There's no complicated math, no what if guessing game. You can say, here's your daily benefit. Here's how long it pays, and here's when it starts. Simple, clear, client friendly. And remember, these facility benefit options are just one part of the story. The real power of OmniFlex shows when we layer in the built-in features and the optional riders. But that's where it starts. It starts to outperform other short-term care plans in a big way. All right, so let's talk about one of my favorite pieces of the OmniFlex design, the optional home healthcare rider. And if you've been in this business for a while, you already know that most clients say they'd prefer to receive care in their own home. They want the comfort of their familiar surroundings, their own button printed recliner, their little lap dog pork chop curled up next to them. I don't want that shared TV remote in the facility lounge that, also it just eliminates the debate on whether they watch Golden Girls or Wheel of Fortune. So the point is, everyone wants to recover at home, and that's where this rider comes into play. It gives client coverage for care received in-home per day, regardless of the amount of home care received. So this means that they receive the total amount they elect for their daily benefit, with the options ranging from $50 up to $300. And here's an overlooked competitive product comparison, but it's really important. With OmniFlex, there's no stipulations on the number of days or hours required to receive the benefit, right after the claim triggers are met. The rider pays on days, not weekly basis, like other short-term care products. And if care is needed at least one day a week, your client gets paid. An example of its competitors' home healthcare claim limitations, they state that they do not pay benefits for weeks in which you do not receive at least 3 days of covered home healthcare services or treatments. I think you guys know what I'm talking about. That's Aetna and GTL, and on top of that GTL, you have to come out for at least 1 hour per visit. So takeaway, whether you're talking to clients who want to age in place or families who want flexible options for future care, this rider checks all those boxes. It's affordable, practical, and it's one of those add-ons that turns a solid plan into a truly comprehensive one. We have the optional hospital indemnity rider. And this one, it kind of has an entirely new dimension of value for your clients, because it's not just about extended care, it's about bridging that gap between hospital stays and recovery time. Here's how it works. Let's say your client's hospitalized for a covered reason, this rider pays a daily cash benefit between $50 and $300, whatever's chosen, and it pays directly to the insurer, which means they can use it however they want. They can, utilize it for co-pays or to cover deductibles. And this rider, it covers room and board in any appropriate inpatient setting. So we're talking ICU, NICU, and, coronary intensive care, and, further step down units. And they, like I said, they get that extra layer of protection without buying a separate hospital indemnity policy. One application, one premium, one streamlined process. So agents love this because it adds another meaningful talking point when you're positioning OmniFlex against, its competitors. You're not just offering a short-term care plan, you're offering a multi-layered coverage solution that supports clients through hospitalization, recovery, and beyond. Now let's take a look at the Simple Inflation Rider. It's another powerful feature that gives clients long-term added value to their policy. And this rider works so it kicks in on the 5th policy anniversary. So your benefit increase, you'll see that reflected on your 6th policy anniversary. And from that point on and moving forward, it grows 5% of your elected daily benefit. That's both on facility and home health. Then every year after that, the benefit increases by that same dollar amount. So over time, it really adds up. By year 25, when the rider caps off, the client's daily benefit will have doubled, keeping up with the pace of inflation and rising costs of care. So let's think about our competitors now just for a second here. Aetna, no inflation rider. GTL does have an option. It's 5% simple or 5% compound, but we got to factor in the premium cost, and we'll touch on that towards the end of the presentation. You may have noticed real quick this growth right here, the ramp up period or the secret sauce. I like to, give Jeff credit for this because the analogy, it's coined by him, and it's one of the most often, we like to use this term a lot and share it. It's a good way to explain it. So, Jeff, do you wanna jump in here and give a little explanation to
Sure.
how this works?
Yep. Sorry, let's give myself. Yeah. So I guess whenever I do a product comparison between the short-term care plans out there, and believe me, we market all of them, and so we love our other carriers, GTL and Aetna and Cigna and Bankers Fidelity and Wellaby. Each one of these short-term care plans has its unique little features and everything. But yes, the Manhattan Life seems to be the top dog, just for a variety of reasons. And if you look at the prices, it's lower by 20%. It's got twice the benefits in the home care area that some of the other ones have. And so agents start to wonder, like, how can this be? How can this be such a dominant product? Well, it's part of its design. The whole thing when you design the extended care plan, what the insurance companies are worried about is they're worried about what's called that adverse selection. What happens if you write a policy and 9 months later the person has a stroke and they're on claim? So these are the cases that are disasters for these companies. And so they wanted to protect themselves. Now this concept has been done in the burial realm forever. It's all a graded benefit, burial. So instead of you have a $10,000 burial, first year they'll give you like your premiums back, $1,000 if you die. Second year they'll give you $5,000, and then the third year and every year after you're at full benefit. So what that does is that helps a company kind of protect themselves from adverse selection, and so they can be a lot more competitively priced. And so a lot of times they can take on more risk than other burials can't. And this is why these graded benefits are so popular. Well, we just took that concept, put it in the short-term care product. So by Manhattan Life, by allowing them to lower the benefit back to 50% on day one, and then it bumps up 10% each year. So the example you're given here, the first year it's $6,000 a month. That's what starts after year one, it's $7,200, then $84, $96, $10,800, and then $12,000. So a couple things I would say on this. Agents say, well, that's, it's kind of a bummer that, what if they do go on claim right away? And I would tell them, look, if the premium is about $2,000 for this policy and they go on claim in year 2 and they have 12 months of $7,200 paid to them and they paid in $4,000 total, they're typically not going to be upset. But how often does that happen? I can tell you that we've written 6,300 of these policies now. We've had fewer than 10 claims on the benefits here. So it's a 1 in 1,000 shot that someone goes and claims in these early time. But because of this, the secret sauce, we call it, it allows the Manhattan Life to be such the dominant player it is. So the schedule you're looking at here there is a ramp up or a secret sauce. It's basically a graded benefit. And so again, it's so rare that we've seen anyone. I think we went 3 years without seeing a claim. So at that point we had several thousand policies. So I've been telling people it's a 1 in 1,000 shot that your person's going to go and claim right away. But if it does happen, you still put them in a great spot. But that's a risk I'm willing to take for my clients if it's a 1 in 1,000, to give them that much more benefit come claim time, they're going to get twice the home care and so many other nice features, that it's a risk I'm willing to take for any client if I explain it to them. So don't let the secret sauce be a negative. This is what makes it so powerful. Go ahead.
Absolutely. Thank you, Jeff. All right, I'm going to shift gears a little bit to another unique feature of OmniFlex, the Fast 50. So this is built in, and it's a feature. It's designed with real life flexibility in mind. Right from day one, clients can access cash benefits, no elimination period. Clients could pay their family or friends who are providing their care. So they receive an immediate cash benefit equal to 50% of their elected daily benefit. And this is especially helpful for, it can be for smaller claims sometimes or extended ones at home. And here's something that really sets OmniFlex apart. If a client is on claim and elects to use Fast 50 within their home health care rider to pay family or friends for various reasons, they don't want a stranger in their house, what have you, and now let's say it doesn't look like they're going to come off this claim. They end up using their entire home health care benefit period, but they can rest assured because they can remain at home on that claim, but jump over to their Fast 50 and their facility benefit, receive 50% of that elected amount, and continue to stay at home without interruption, and they can stay until that benefit period is fully utilized. So this is huge, especially since we factor in so many people want to recover at home these days. Like Jeff says, cash is king. So here's a stat for you. 78% of adults living in the community needing long-term care depend on family and friends as their only source of help. So Fast 50, this is where it steps up. And, without a cash benefit, a policy it's not complete. Your client's future needs are not fully covered. So they are missing a very important safety net here. Another unique feature is the prescription drug benefit. Note this is the only short-term care product that has this value-added benefit. It's built in. And this benefit it's not subject to any pre-existing conditions, no limitations there. Any prescriptions taken prior to the policy issue, those can be reimbursed. So, a client can potentially pay $0 for their premium if they factor in this reimbursement being, they can take as few as 3 generic or 1 brand name to reach this $300 yearly maximum. Another great unique feature to outline when you're with your clients. And here's that claim form. Your clients have a few options here. They can scan that QR code or they can go into their consumer portal. They can also print it out, fax it in, whatever they prefer. And these can be submitted one at a time or wait to batch the claims all together at the end of the year. It's preferred to wait till the end of the year, but if the option's there, if they want to send it in monthly. And since we're looking at claim forms, I just wanted to show the facility and home healthcare claim form. Consists of 4 pages. It's pretty straightforward. First page is instructions on filling out the claim. Second page, that's the insured completes. Third page is physician's certification and sign off. And last one's a HIPAA release form, so Manhattan Life can pull the health or medical records. And a couple other benefits here I need to outline. The bed reservation. This is designed to protect your client's space at a nursing home or assisted living facility if they get they temporarily admitted to a hospital. It'll reserve their bed or room for 10 days per year with a lifetime maximum of 20 days. And this can actually reduce stress for both the clients and their families, ensuring that they still have the place to go back to, especially a preferred room that they've gotten used to or caretakers at a facility. Restoration of benefits. This is another big feature that makes OmniFlex stand out. If you look at this graph here, you'll see the highlights, and notice that there's so multiple times on OmniFlex, and then as well as Aetna's recovery care. What that means is that this plan restores obviously multiple times, but the plans are not exhausted until they utilize all of those days that they elected. You factor in the restoration, so essentially that's 720 days on facility and 720 on home health care. So they can really maximize these plans, and I really wouldn't call it a short-term care policy. And it's kind of a no-brainer. If either of these two products are available in the state where your client is, why wouldn't you purchase these? Because the other ones, they have the restoration, but say they go on a smaller claim, use 60 of their 360, come off, satisfy that 180 days, got to go back on another claim. All those that 300 days that they didn't utilize on that first claim are just gone. They have no opportunity to utilize those again. So huge factor to take in, and we like to call it the multiple bites at the apple. I think Jeff may have coined that one as well. And underwriting. All right, so here I'm sure a lot of you are familiar with our InstaPivot. The 110 rows are, the health ailments or medications that knock people out of coverage. And just notice that OmniFlex on the top there, for their limited benefits, 67 of those 110 rows are accepted, 40 rows for their full benefits. Just kind of showing a little bit of competition there with Aetna and GTL, which are significantly less, but something to keep in mind when you're offering those clients that do, have several health elements. And this is another graph here that's kind of, notice the green and red. We got OmniFlex first up here. So all of these health conditions on the left here will be accepted under limited coverage with OmniFlex. Just as the graph goes over, you see more and more red. We got an example of the monthly premium on the bottom here. I do have a slide towards the end here. We'll go into a little bit more depth of that, but something to glance at when you get these slides. And as we're wrapping up, I want to talk about the underwriting process because it's simple. There's two sets of yes or no questions to determine whether your client's eligible or not. Underwriters perform their prescription drug history check. A phone health interview is only conducted if there's just discrepancies between the medications and the health conditions that they're paired with. So it's important to make sure that when you're putting those health conditions on, what medications are they're taking for that condition. And decisions are made within 24 to 48 hours. And when in doubt, call Renee Stutes. She's our underwriting specialist. She's awesome. If you haven't ever talked to her, she's great. Definitely utilize her. And I just want to show you real quick here, the health questions part 1. So any questions within here, if they are answered yes, they're not eligible for coverage. And that goes below that, you're going to find the health questions part 2. So if any questions here are answered yes, they will be only eligible for the limited benefits, but still it's $100 daily on both facility and home health care. You just don't have that simple inflation rider available, but still a solid plan regardless. And it's, a lot of those clients that have those health conditions that have no other options anywhere else, they can come to OmniFlex and get a policy. So they have something in place. All right, and here's our premiums. Jeff, if you don't mind, I want to pull you back in here real quick.
Sure. Yeah, this slide here. Yeah, I mean, I guess look at the cost here. I mean, I think you touched on this earlier, Morgan, that what's happened in the long-term care industry. Well, it's gotten really hard to get policies issued, Yeah, the price has gone through the roof. So unfortunately, so many people that maybe looked at a long-term care policy maybe 5 years ago or something, when you start bringing up the topic of extended care to them, they're like, oh no, I looked at this, whatever it is, the old Hancock plan or a Mutual Omaha long-term care, and the premiums between husband and wife were like $9,000. And so, they've got this thought in their head that these things are super expensive. And so with short-term care, you can walk in there again and offer, I don't know, like a 65-year-old a $200 a day plan. Looks like it's $107 a month. And that's $1,200 a year. I mean, that's if you were to go ahead and price out the same pool of dollars, if you will, I don't know, call it $200 a day for both home care and facility, and give yourself a little pot of money of $100,000. If I try to sell someone a 65-year-old $100,000 of long-term care, a 65 single female, for example, that's going to be north of $200 a month. So short-term care, dollar for dollar, is about half the price of long-term care, and it covers the short and the long. So I guess this slide, the main thing I would say is, I like to make this part of my presentation because I want people to see that actual $37 in there, because that immediately puts that prospect thinks, well, I actually can afford this. You know what? These are very affordable premiums. So, and they're used to seeing, things starting at $200-300. So, yeah, it's very, very affordable. Short-term care is. That's all I got.
We're gonna wrap up with that. And any questions that anyone has, feel free to type those in if you have not already.
I'll help you look, Morgan. Can someone purchase an OmniFlex, Manhattan Life OmniFlex short-term care plan and couple that with a home health care plan for Manhattan Life? The answer to that is yes. Matter of fact, a lot of our successful producers are doing that. So when you're in there quoting and enrolling on Manhattan site, it allows you to actually pick the home care policy and the short-term care policy on the same app, which is type the client's names in there and select your benefits for each plan, and they'll simultaneously underwrite that. And that's a great way to double up on discounts. Say the person he has, I don't know, he's taking Eliquis and lisinopril and metoprolol or something. So he's got two generics and he's got a brand name medication. Well, right there, I know I've got 45 a month times 12. I've got almost $500 of money to spend towards premiums and that prescription drug reimbursement. So yes, I think when you're taking an OmniFlex app, you almost should always add a home care with it, because more often than not, those premiums are, $300, $400. You can get $600 back on the prescription drug. So they end up kind of being a free home health care plan that you throw in with OmniFlex. So great question. And yes, you can sell one of each at the same time. And I strongly suggest you do. Here's a question that must have come in after you were talking about this, Morgan. I'm just going to grab this one too. It says, can I pay family members for the extended care needs in the home and stuff? And yeah, I think you touched on this with the Fast 50 benefit we have. I don't know if you want to put that slide on again somewhere, but I can just tell you, I think I mentioned I've written between 600 and 700 long-term care policies dating back to 1997. So I guess that gives me 27 years. I do get claims. I probably once a month, I have someone call me, and invariably what I hear is, can I pay my daughter? Can I pay my spouse? Can I pay the neighbor kid who's been shoveling the driveway or mowing the lawn? My church has been bringing me some meals. I think there's another part of that slide that, with 78% of adults receiving care at home are relying exclusively on family and friends. The long-term care industry used to not have any cash benefits. Golden Care came around, and we insisted, when we used to market with Life Investors, now Transamerica, that we really needed to have a 40% of this benefit should be able to be paid in cash, because we know that 80% of home care is family members. So yes, the answer to this long-winded answer is yes. With Fast 50, we'll give you half the money in cash. If you have a $6,000 a month home care benefit, we'll pay you $3,000 cash, no questions asked, to pay that daughter who's missing work or leaving work early or whatever it is, to reimburse that wife or pay that family member or that church member or the neighbor kid who's helping out or what have you. So that is a very big, powerful part, and it's the only one in the short-term care industry that has a cash option. That another is one of those standalone reasons why I would really sell OmniFlex first before a lot of the other ones, because of that very thing. Morgan, I want to steal your thunder. Looks like there's one more in here. I probably should let you answer those.
Go ahead.
This one's and then there's someone else who wants to, I think they want to do the stateability grid, so we'll bring that back up too. But this is another question on, okay, so they're asking, do Medicare Advantage or Medicare supplements cover any expenses for like extended care? That's probably a very popular question right now, because we're in the midst of Medicare Advantage season, right? So everyone's talking Medicare, and so that's a good question. And going back to that, observation, inpatient, we kind of touched on this, and no, typically Medicare Advantages and Medicare supplements are kind of similar. Medicare is designed to pay for days 1 through 20 following a hospital stay. So the rule is you have to spend at least 3 days in the hospital, and you have to check into a facility within 30 days of leaving the hospital. And then you get 20 days of coverage there, and then days 21 through 100 are picked up by your supplement or Medicare Advantage plan. Like I touched on earlier, so often we never get to day 21. I mean, they get you on your feet and get you out of there within a week, within 7, 8, 9, 10 days. So there is very limited to no coverage from supplements or advantage plans for this short extended care needs. So that's why the short-term care becomes so important. Then the last one was about the availability grid. And for some reason on my screen, this is super big, or I'm looking at like a half a map. I don't know if you guys are seeing that, but on my screen at least, I don't know why that would be. Yeah. But I would say this also, yeah. So I know, at least on my end, it doesn't look like I can't only see half this
We'll
map.
send out these slides so they have it
Just gonna
regardless.
say, for that question, everyone's gonna get a copy of this presentation, so you'll get all these slides. And I think that was all there was, Morgan. I know we're a little past a half hour, so I don't see any more questions in here. So
right on.
Okay.
Thank you. All right.
Lynn said it was fine, so it's just me.
All right. I just want to, before we let you guys go, special event happening next Thursday, November 13th at 10 a.m. Don't miss this one. You know, all those OmniFlex questions, we will be live. Tom Randall, Jeff, Manny Rosen, myself, and we may have a few other team members on. I highly encourage you guys to tune into this one, or at least register, and we will send out the recording to you. And we got our knowledgeable team here. Reach out to any of us anytime. We're here to help you. And with that, wrapping up, I hope you guys have a wonderful day and wonderful rest of your afternoon. Thanks for tuning in. Call us, questions, ready to get contracted. We're here. And you all take care. Thank you.
Golden Care is looking forward to serving you with new tools, new products, new innovations, and always the best support in the business to help you succeed in 2022. So give us a call at 800-842-7799 or check out our website at www.goldencareagent.com.